Hey everyone, welcome back to my channel. I am Kashia with Katie Investing, and if you've been watching the stock market lately, you know things are looking pretty rough. But here's the thing, a bear market doesn't mean you can't make money. In fact, today I'm going to show you how you can potentially make 10% weekly returns even when the market is crashing. Sounds too good to be true? Stick around, because I'm breaking down 3 proven strategies that could help you profit in a downturn. Let's dive in. First, let's quickly define what a bear market is. A bear market happens when stock prices fall by 20% or more from recent highs, and investor sentiment turns negative. It's a scary time for many, but for savvy traders, it's an opportunity to make money. The key is knowing where to look and what strategies to use. All right, let's get into the first strategy, short selling. This is one of the most common ways to profit in a bear market. Here's how it works. You borrow shares of a stock you think will go down, sell them at the current price, and then buy them back later at a lower price to return to the lender. The difference is your profit. For example, if you short a stock at 100 and it drops to 90, you've made $10 per share. But remember, short selling is risky because if the stock goes up, your losses can be unlimited. So always use stop-loss orders to manage your risk. Next up, we have trading put options. This is a safer and more controlled way to bet on a stock's decline. A put option gives you the right to sell a stock at a specific price before a certain date. If the stock drops below that price, you profit. For example, let's say you buy a put option for 5 with a strike price of 100. If the stock drops to 90, your option could be worth 10, doubling your money. The best part, your risk is limited to the premium you paid for the option. Just make sure to do your research and focus on stocks with high volatility for the best results. Now let's talk about inverse ETFs. These are exchange-traded funds designed to move in the opposite direction of the market or a specific sector. For example, if the S&P 500 drops 2%, an inverse S&P 500 ETF might rise 2%. Inverse ETFs are great for beginners because they don't require you to short sell or trade options. You can simply buy and hold them like regular stocks, but be careful. These are meant for short-term trading, not long-term investing. Use them to capitalize on short-term market declines. Before you start using these strategies, let's talk about risk management. Making 10% weekly is an ambitious goal, and it comes with risks. Here are 3 tips to keep in mind. Use stop-loss orders to limit your losses. Diversify your trades. Don't put all your money into one stock or ETF. Manage your position sizes. Never risk more than 1 to 2% of your portfolio on a single trade. Remember, the goal is to stay in the game long enough to win. Let me show you a real-life example. Last week, I noticed a tech stock that was overvalued and showing signs of weakness. I bought a put option for 3 with a strike price of 150. When the stock dropped to 140, my option was worth 10, a 233% return in just a few days. That's the power of these strategies when used correctly. If you're ready to start profiting in a bear market, pick one of these strategies and start small. Practice with a demo account if you're new, and always do your research before making any trades. And if you found this video helpful, don't forget to smash that like button, subscribe, and hit the notification bell so you don't miss out on more tips like these. Let me know in the comments which strategy you're most excited to try. Thanks for watching, and remember, the market may be down, but your profits don't have to be. Stay tuned for my next video where I'll show you how to build a recession-proof portfolio. See you then.